in January 2025 because their pre-series cars or those field trial cars have to be from the mass production lines. So at least basic set of at least single equipment line has to be installed by us within this year. So we are preparing these investments basically for those future years. So I'll say in conclusion that for this year, by and by, we're already prepared for achieving what we are targeting.
Thanks, Ankush. Thank you. Thank you. Next is Anirudh Shetty. Next, Anirudh. Is there?
Yeah. Hi, I'm there. Am I audible?
Yeah. Anirudh? Hello? Yeah, Anirudh?
Yeah. I'm there, but am I audible?
Yes, you're audible, Anirudh. Go on.
Yeah. I had a couple of questions, but I'll probably ask two and I'll just join back in the queue later. So my questions really are, we are very well established in two-wheeler and, we are now looking to, grow and make bigger strides in the four-wheeler segment. But in terms of the kind of parts and the kind of, products we're doing in the four-wheeler today, where would you slot that in terms of, criticality, in terms of margin, and just how do you see this journey of us, becoming, better in the four-wheeler space play out over time? Just wanted the evolution over there.
Yeah, to be very honest, these things are generally not for the public domain. No manufacturer will really divulge the real numbers that which segment is producing what, which product is producing what, because they are generally very price sensitive informations. And competition also these days is very, very sensitive. So we have to maintain this confidentiality because normally it will not be appropriate on our part to really divulge these numbers on a public forum. But they are actually our company's own GSP. I think probably you agree with me. What is your thought on this? Because price sensitive information that which segment is producing what, or which profitability of two-wheeler or three-wheeler or four-wheeler for any matter.
I think that was not the question.
Yeah, it is his question.
No, his question was that in car business, what is the complexity of the operation?
No, is it the margins or the profit? What is your question?
Anirudh, can you repeat your question, please?
Yeah, it's more about, we're well established in the two-wheeler space and, over time we've, gotten more complex products because we, the customer trusted us and, we're trying to now replicate that journey in four-wheelers. So I just want to understand where were we in that journey on four-wheeler and, over how many years do you think you can actually get to the level that you are, seeing in the two-wheeler segment?
Complexity and how much time we can take to reach?
Yeah, one thing is that one thing is clear. Four-wheeler business has to be very, very complex business as compared to two-wheelers business. So it's very clear that two-wheeler is, say, graduation and then commercial vehicles is, say, post-graduation. Then passenger car business is master's degree or the doctorate degree. So complexity is going to increase. But eventually, whatever learnings are there from one segment to another segment and to next segment. So eventually, this is how the life is working. Because if you really see 100 years back, they were all crank-driven cars where man has to start it manually by pushing the rope or by pulling the rope or cranking the engine. Today, we just push the switch and engine starts. Something similar in two-wheeler and four-wheelers and all. So eventually, business is more complex happening in passenger car business or commercial vehicle business. But here lies our expertise because since we were there in two-wheeler, also in complex two-wheelers, not simple run-of-the-mill two-wheelers. They were all high power, high segment, 800 cc, 1 liter, 1.5 liter, 1.2 liters. So they were per se very complex product as compared to typically which we see on Indian roads, 100 cc or 150 cc. So we already were at a certain level. Now we are into next levels of complexities. And that way we are technically fully competent, technologically we're fully competent, and we have all the team members to do that.
Anirudh, I'll add one more thing here. One of the challenges, which we face is, as I had explained in my first slide, we have more than 900 plus SKUs. Okay, and this is of course because and it is trust me, practically it is very difficult to handle so many SKUs on a monthly basis. So
Right.
one of the benefit in the passenger car vehicle segment is that the number of parts are not that much. They are more complex, but the number like a one assembly in two-wheeler may have 30 parts, but the similar kind of an assembly for a passenger vehicle will have only 8 or 9 parts. So that is also one of the focus area we have now, that how can we control the number as the business grows. It becomes practically impossible to handle so many SKUs. So though they are more complex, but they give us a benefit that the number of SKUs hopefully will get normalized and decrease in the passenger once we'll grow further in commercial vehicles and the passenger car vehicles.
So is it fair to assume that like a passenger in commercial vehicle, as it grows as a share of mix, the return on capital employed could be better because the inventory days will be better over there, and our asset turns actually our asset turns will be better because we'll be able to kind of run the assembly line in a more streamlined manner, and since it's complex, the margins are just as good there. So then ROCE should just go up with time. Is that like possible?
Yeah, to be very frank with you, inventory days and all, I think I understand you always have this question on the asset turnover thing and all, and we always give the same answer. Asset turnover we have been focusing on, but it will take some time, because the good part is that quite a large number of investments and recouping of the plant is already done. But whenever a new business come in and all, then this is a peculiarity of our business, as MD sir had explained earlier. The gestation period of our business is much higher. Okay. Now and secondly, I always maintain that our value addition is almost 70%. Now if someone for a 30 rupees raw material component, if someone is paying 100 rupees, then of course it's because of the technology and the capital investment which we have. We can have a 75% raw material component and earn a EBITDA margin of 7-8% and all, or we can have a raw material component of 30%, do some capex and earn an EBITDA margin of 25%. Now that is a choice which we need to make. Having said that, yes, we are focusing on that part, but I think if you're saying that once the share of commercial vehicle or a passenger car vehicle will increase, then it should improve my capital asset turnover ratio and all. I mean, hopefully, the way we are planning, our quantum of capital investment should reduce going further. Not that much as compared to the repayments which we have. That should contribute to the improvement in asset. I will keep it like that, basically.
No, actually, you might have already witnessed the past 2-3 years we had to invest very heavily, because one side we were growing at 30% rate. On other side, we had to upgrade our old plant and legacy plant, which was almost more than 30 years old. So that also added to additional capital investment. And if you are joining our calls earlier also, so we had to last to last year we had to invest a lot of funds on the housing campus for our employees. So all this combination of things, capex was high. But this year, if you really see, on one side we are targeting to grow over 30%, and other side we are saying that this year capex will be lesser than the last year, and the overall borrowing over repayment will be high, and overall debt will reduce. And we have also said just now that whatever capex we are doing, this capex, even in this year, whatever we are doing, it's not for this year. It is for year 2026, even not for 2025. So it really shows now that ratio of capital investment will start showing improving. Investment will start, investment to turnover of what you are saying, it will really start showing improvement, as I'll say. Therefore, this year is already going to be an indicator. You already have all the numbers with you.
Right. Absolutely. No, thanks for taking my questions. I have a few more, but I'll join back in the queue.
Thank you.
Thank you. Thanks, Anil. Next is Mr. Manjeet Buaria. Is Mr. Anil, Manjeet is there? We move to a question. We can take few questions from the people who are.
Hand raise करके उनको पूछो.
Mr. Prateek Kothari. हेलो
आपको अनम्यूट कर दो.
हाँ मिस्टर प्रतीक कोठारी. नहीं अनम्यूट है. Okay, we move to Mr. Rudresh. Mr. Rudresh. Hello.
Hello, am I
Yeah.
audible?
Yeah. Who is that?
Yeah. Rudresh here.
Yeah. Hi, Rudresh. Hi. Go
Hi.
on.
See, I got a couple of questions. So, any thoughts on reducing debt by stopping dividend?
Stopping dividend.
Yeah. No, at least it will be
So,
getting to the
you are an
suitable.
investor. You should rather say thanks to management that we are paying dividend. Huh?
No,
But you know,
in the long run, it will help us out, right? So that's why.
no. We will say that there are all kinds of investors. There are few investors who are holding only 100 shares. There are few investors who are holding only 10 or 20 shares, and few are, of course, large investors. So small investors always look forward that there should be some dividend income should come, and for that matter, large investors do also. And dividend is more of a kind of trust building and confidence building activity among the shareholders and investors, because we are almost 35 years old listed company and we started paying dividend only 4 years back. So obviously after paying 3 years and we say we don't pay dividend, it doesn't look good. Well, first of all, if there is a happiness, this happiness should be shared to whatever extent we can share. Okay.
No,
So
it is just like
this
taking out food
yeah.
from the financial institution and giving out to shareholders, right? So it should happen the otherwise.
Yeah. No, actually, if what is the outflow out of the dividend? Only 1.5 crores.
1.5 crore.
So out of 1.5 crores, even we take a drop out of the bucket, the water level will not go down. If our overall debt is long term and short term put together around 200 crores, so why by removing that 1.5 doesn't make any effect. So rather it gives a little sentiment that okay, we are not sharing happiness with our stakeholders. So we say dividend is not a kind of payout. We say it is a kind of confidence and trust building with our investors. Yes, if company is earning money, whatever little bit we have surplus, we should always share happiness with our investors. And I feel company will keep following this policy. And we wish a time comes when really profitability is higher and all other things are better. Rather, we should see if we can really increase the dividend. But to be very honest, we really want to respect this sentiment of taking care of small investors.
Okay.
It's
And
just
my
a token
second,
of appreciation, nothing else.
okay. Thank you. And my second question is, see, in the financial release, you people release the presentation, but it only covers the financial metrics. It doesn't cover rest of the moat or the showcase which we show in our investor call. So it would be better if we share the same presentation which we share on the investor call in the financial release as well.
We can try that, Rupesh. Actually, you understand, being a listed entity and all, we have to get our accounts audited, release everything. So, generally the practice which we are following is that a brief snapshot of. But numbers whatever is related to numbers here, that we already release. I mean, only the business updates and all that we keep it for investor call. In fact, the number of slides, if you look at which were released earlier, were much higher. They were more detailed.
No, I was asking about the business updates only. So it would be better if we release it in the.
That's not a
along with
financial, but that's not a
Okay.
financial. That is more for investor call, basically.
Okay, fine. Thank you.
Thank
That's
you.
it.
Thanks, Rupesh.
Okay.
I think Mr. Pratik Kothari is back. He just messaged that.
Yes.
Mr.
Hi, good
Pratik.
afternoon. Yes,
Yeah,
hi. I hope I'm audible this time.
Yes, yes, Pradeep. Go on.
Yes. Hi, good afternoon, sir.
Good afternoon.
My first question on the cost side, I mean, this year, be it our other expense, employee, depreciation, interest, all seems to have gone up much higher than what we have delivered on the top line. So, I believe this is all in anticipation of what we have to deliver this year, and all this additional cost that is hitting up P&L is related to that.
Yeah, Pratik. So, I mean, of course, the keeping the growth in mind and all, we have to hire people and all. One thing is, yes, you're correct that this disturbance because of the gear grinding capacity which had come in for few months and all. But all other expenses and all had been, as you understand, that employee hiring, and then there are a lot of tools and all which gets consumed as a part of our machinery and production process and all. So all those things were there, and there were few uh, like for passenger car vehicles, there were few tools which were deployed in the last quarter of the year, which of course will get used over a period of next 1 or 2 quarters and all. So yes, you're correct. The keeping the growth in mind and all, these expenses had slightly increased, but we have always maintained that as our business will grow, as the scale of operations will grow and all, our the EBITDA margin should be in the range of 20 to 22%, 23% and all. That is broadly, because as the scale of operations grows and all, every time the with each and every growth and all, keeping a EBITDA margin of 25% may not be possible. We have always maintained that. But yes, to answer your question, you're correct. A few bit of these expenses had grown.
But it was only 1%, one notch over 24% for the entire year.
EBITDA margin for the full year. For full year.
21%.
Yeah.
So, nothing can be always consistent.
Correct.
So 1% here or there, 2% here, there will always happen. Because always, all such margins are range bound. They cannot be handled quarter on quarter. They cannot be handled year on year. They have to be over a long period of time. So,
Correct. So my only question was that were there some additional investments in terms of other expense, employees, in depreciation, so in terms of capacity that we are doing in anticipation for the 550 crores that we intend to do, or is this a natural process and next year again we'll see costs going up? So this is the new. I mean, sometimes you invest in advance for future growth which might come in, and sometimes the cost structure itself has gone up. So I'm just trying to understand where are we in that.
I guess we already explained that this gear grinding capacity was a shortfall which we invested last year. And now, in fact, we have created a slight cushion also, because these gear grinding machines are lead time of a machine is 1 year. And we already burnt our fingers last year that we ordered the equipment, they got delayed, we could not get it. Now we have invested some buffer cushions also. Many times we get customers sudden orders for such critical equipment. So to answer your question is yes, we have created now some investment for cushion also. So this is 550. Idea is that for this year, at least we cannot say that we have any capacity constraints, because we already have created the desired capacity even as on today for this entire year. So if the projected forecast by the customers is being adhered and there are no any geopolitical things happening in a big way, minor adjustments here or there is always possible. So now technically this year we are having sufficient cushion for all the capacities. So this is how we invested very heavily last year, because since we suffered last year, so we then thought it is better to now play safe.
Right. No, fair enough. Fair. And sir, another reason I believe for slower growth this year was also the MAN project didn't pick up as was anticipated. So that is now back on track, and the numbers or the volume is what we were supposed to do.
All projects are moving in the right direction. They are on the anticipated volumes, anticipated forecasts. But like we are growing 20, 25, 30%. So obviously, no European company will grow 25 or 30%. So, but ours was always a new business, new projects, new models. But those customers they are having their own growth margins, growth targets of 5%, 6% on their each model. So those growth plans are there, but yes, trucks and all, there are now these days because of energy and all such stuff. There's a little weakening of the demands. I will not say a decline, but the weakening of the demand, or it's a little stock correction also, because in COVID time, everybody overproduced in Europe and US. Now they are taking care of the stock corrections also. These multiple effects are there, but we are safe because we are always having new launches, new products. So, we always are doing investments. Even now we are telling that to 2026 mass production, we are investing this year. So eventually, these kind of actions we took in previous years also. So eventually those models are now at the verge of starting. So business will really add up to these numbers. This is how, despite weak demands from across the segment customer profile, we are still anticipating growth, because it's not only our existing model, new launches are also there. And when new launches happen, first 1 year is always stock, build up of stock, build up inventories. And even in India, if any new product launch is there, everybody will produce very large number of vehicles. So this is how our business, it's a mix and match, but it really maintains our growth trends or our growth projections.
Correct, fair enough. So my last question on the ZF relation that we have. We started the first plant, I believe, for one of their projects, and then over time we got 6 from them. And ZF also publicly keeps mentioning about the shift that they want to do from in-house manufacturing or from Europe to India. Just, sir, how is that progressing over the past year? In terms of what are we seeing, the conversations we are having, the RFQs, some qualitative aspect there.
No, that's progressing very good, because some of the project from ZF has already moved to our company, which was actually ZF was producing inside their own factory. So that has already moved to India, and we are getting very, very impressive RFQs for resourcing projects and also factory. That activity is really going on with a very strong note. But these big customers take their own cool time to take decisions. But yes, that ZF is really, in fact, probably if you can answer also how we are really progressing on ZF's future strategy, because ZF's in resourcing projects from India. So if you can update.
So basically ZF is going to be one of our biggest customers. The business only started a year and a half back. So that's on track. I think in the coming years, it should be sizable double-digit percentage. And this year also, they of course contributed majority. The projects which started somehow this year, there was some kind of impact on the sale from their customer end, but next year it is projected to grow. So far it is stable, and of course on the new projects we are in advanced discussion in many activities, but the current ones also have to peak up. So that is what now we are preparing for.
Correct, sure, fair, and thank you.
Thank you. Thanks. Fine. Next is Saket. Next is Mr. Saket Kapoor.
Yeah, namaskar, sir, and thank you for the opportunity. Sir, firstly, could you quantify the impact of this gear grinding unit in value terms? How much has it impacted the revenue, or how much has the bottom line being impacted?
We lost almost 40 crores of sale in last year because
postponed.
It was postponed or delayed. And eventually out of this, you can say around 20-30, almost 50%, 40% sale was on account of this gear grinding loss. Yeah.
So this gets booked in this year, and our number of 550 includes this 40-45 crore loss revenue.
Obviously.
Obviously.
Yeah, obviously.
Okay, sir. And for the Titan project, what have been our capex? अभी तक हमने कितना spend कर दिया है और ये कैसे phases में spend होगा ये रुपए कैसे लगेंगे?
यार देखो ऐसा है कि on such forums it will be difficult for us to quantify to such micro levels, but we have already told that total investment is for planned for this year is 60 crores, and out of this substantial portion is going to be invested for the Titan project. But specific investments details will be little not possible for us to divulge. But yes, within this 60 crores, substantial portion is for the Titan project. And in coming year, because as we told you that startup production is 2026, so substantial will be done this year. Then eventually when the mass production starts, then we have to add some duplication of we have to then do the capacity building. So like if we need 5 machines and initial phase we add only 1 machine. So eventually remaining 4 machines will be required as and when the mass production starts. And it will also be, even when the customer starts, it will not start full volume from the first year itself. So it will happen in a phased manner. So eventually we will keep on investing, and it's not really possible for us to dig out details at such micro level.
Right, sir. But sir, you can give the entire project cost. I'm not asking the breakup for every year, but total how much are we going to spend on this project by the time it is full?
Not possible. Those phases, man. It will be in phases and all.
It will spread over 2-3 years. Actually, it will spread over 2-3
no
years.
Issues, sir. Okay, sir. Jitendra ji, can you give me the yes, sir. Jitendra ji, can you give me the current maturities for this financial year? क्या repayment है हमारा इस बरस का?
Close to 48 crores.
Okay, and sir, when we look at the cash flow this year, the tax payment has been doubled than last year. So, can you explain the reason why our tax? The payment of taxes, direct taxes which we have paid.
Actually, there was some payment of previous year, which 5 crores was a payment of last year, which has got paid this year, which was not paid
prior
last
period
year.
item also. Okay.
Yes.
Okay, and lastly, sir, you mentioned 40
Sir,
crores.
please let's stick to 2 questions. There are other people waiting.
Okay, जी. धन्यवाद sir आपका.
Thank you. Next is Mr. Manav. Mr. Manav. Mr. Manav. Let's move to Miss Divya.
That's it.
That's it.
DJ Piyush.
Mr. Piyush Jain.
I think this is the last for the day.
Yeah, this will be the last question. Mr. Piyush Jain.
Am I audible?
Yeah. Mr. Piyush.
Yeah, am I audible?
Yes, you are.
Yes. Please go ahead.
Yeah. Good evening, sir, and thank you for giving us opportunity. Sir, just one thing to know. Last quarter, our gross margin has reduced a little bit. So just want to know what is our number which we think this gross margin we will able to manage and work out in the coming year and quarters. Is it something pricing related issue where the pricing has been not able to pass on, or the cost has increased of the raw material component?
No, gross margin has improved from 70.19% to 71.06%. It's not reduced.
Gross margin has improved rather.
Improved.
Okay, maybe my calculation was maybe.
Yeah, it has improved by. I mean, I would say by just a 1%.
Okay, so the margin has dropped. So you will be able to recoup again the margin level of 23, 24. What is the guidance? Because I joined late, so I don't know if you said something.
Yeah, so EBITDA margin is also, so last FY23, 22-23, it was 24.69%, and FY23, 24 is 24.09%. So I mean,
Yeah, I
this
know.
much of variation.
It's only 0.6%.
No. No, sir, not asking for full year. Last quarter, let's say we have at some 20 point something. That's why I'm asking. We will again come back to 23, 24 only for full year basis future, or that is what the one quarter is now?
Of course. Actually,
Yeah.
last quarter we already explained. Since major capitalization happened in last quarter, depreciation margin was really very high, due to which all these issues.
He's talking of EBITDA margin.
Yeah.
EBITDA margin, but
No.
there was some